So, what's the real economic endgame for Bitcoin? Today, we're going to look at the high stakes competition between its different versions, and we're going to do it through the lens of game theory to figure out their strategies. We'll break down how two fundamentally different approaches are battling it out for security, for utility, and, for ultimate dominance. All right, here's how we're going to break this down. First, we'll start with the philosophical split that kicked this whole thing off. Then, we'll dive into the security challenges that every single blockchain has to face. After that, we'll get into the really fun stuff, miner incentives and game theory, explore a mathematical model for how markets get adopted, and finally, we'll talk about what the future of blockchain value might actually look like. Okay, first up, una visión, dos caminos, or one vision, two paths. To really get what's happening today, we've got to go back to the beginning. We need to understand the original vision for Bitcoin and that critical fork in the road that really created two completely different futures. So this slide just lays out the core split perfectly. On one side, you have Bitcoin, BTC, which decided to become digital gold, a store of value. It does this by keeping its main blocks small and pushing most transactions onto other layers. On the other side, you've got Bitcoin SV, which stuck to that original idea of peer-to-peer electronic cash, building for unlimited scaling right on the main chain so it can act as a single global data ledger. And you can see how those different philosophies lead to totally different results. I mean, they're polar opposites. BTC's small blocks mean you get high fees, which kind of reinforces its role as a big money settlement layer. Meanwhile, BSV's approach, unlimited blocks, allows for these incredibly low fees, which makes it perfect for tons of data transactions and business-level micropayments. All right, now we're getting to a massive challenge for any proof-of-work chain, long-term security. The big question is, how do you pay for it? This is where the real economic game starts to heat up. So, the security of the whole network, what protects it from being attacked, all comes down to something called the security budget. It's basically the total payday for the miners doing all the work, and it's made up of two things: the block subsidy, which is just new coins being created, and the transaction fees that we all pay. But here's the catch. That block subsidy, a huge part of the security budget, is designed to shrink fast. Every 4 years, this thing called the halving happens, and it literally cuts the reward for miners in half. It's like a ticking clock built right into the system. So here's the bottom line. And this is absolutely crucial. As that subsidy gets smaller and smaller and eventually goes to zero, transaction fees have to take over. They have to become the main source of income to keep the miners paid and the network secure. How each chain plans to generate those fees, well, that creates two very different games with very different risks. And this is where things get really fascinating, because this is where game theory enters the picture. We're going to look at miners not as believers in some philosophy, but as rational economic players. They're running these massive computer farms, and at the end of the day, they're driven by one thing: profit. This quote right here, it just nails the motivation of a miner. Hash power, that raw computing energy that secures the network, it isn't loyal. It's a commodity, and just like any commodity, it's going to flow to wherever it can make the most money. Simple as that. So this leads to a pretty wild economic model called the runaway gap. Here's the theory. As BSV's transaction volume explodes, the total money made from millions of tiny little fees could actually become more than BTC makes from a few very expensive ones. And if that tipping point is reached, a miner who switches from BTC to BSV could see their profits jump by like 7 to 50 times. That would basically create a gravitational pull, an avalanche of hash power moving over. This sets up what one source calls a checkmate scenario. You have two completely different models. BTC is betting on scarcity, which by its very nature caps its fee income. It risks hitting a fee cliff if demand ever drops. BSV, on the other hand, is betting on massive volume, where its potential is only limited by how many people and businesses actually use it. Now, to really double down on this game theory idea, we can actually use another mathematical tool: Markov chains. This is a way to model how a system with just way better utility could, in theory, absorb an entire market. So what in the world is a Markov chain? Well, think of it like this. If you want to predict the weather for tomorrow, is it more important to know what the weather was like today or what it was like a month ago? Today, right? That's all a Markov chain is. It's a way of modeling events where the next step really only depends on where you are right now. So in our market model, a business can be in one of a few states: indifferent, using a competing chain, or using BSV. Now, the argument here is that BSV's utility, its sheer efficiency and low cost for data and payments, acts as an absorbing state. It's like a one-way street. Once a business moves to a system that's just fundamentally cheaper and more efficient, the economic reason to ever go back pretty much disappears. But look, for this whole absorption idea to even be plausible, being a little bit better is not going to cut it. The technology has to offer something that is orders of magnitude better than the competition. The choice has to be a no-brainer for anyone dealing with huge amounts of data. Which brings us to this number right here. This is the tested capacity of BSV's Teranode update. Live trials have demonstrated it can handle over 1 million transactions per second. And just to put that number in perspective, let's look at how it stacks up. We're not talking about a small improvement here. This is a completely different class of system. It's a capacity that just blows past not only other blockchains, but even global payment giants like Visa. It's not in the same ballpark. It's not even playing the same sport. And this is where the abstract math starts to hit the real world. This insane capacity isn't just a number on a slide. It's what enables actual companies in these sectors to build real things. We're talking about immutable health records, tracking products across a supply chain, and processing millions of tiny micropayments. These are things that are just flat out impossible on slow, expensive networks. Okay, so what does this all add up to? Where is this all heading? Well, the sources suggest we're on the cusp of a really fundamental shift in how we think about blockchains, moving away from speculation and towards actual function. The argument is that we're moving away from crypto as an asset and towards a model of blockchain as a service. In this world, a network's value doesn't come from its token price going up, but from how useful it is as a base layer for the real economy, kind of like how we use the internet today. This table lays out a pretty interesting vision for the future, where winning isn't a simple thing. BTC might hold on to the top spot for market cap, just based on its digital gold narrative. But when you look at the metrics that measure actual economic use, like transaction volume and data integrity, the prediction is that BSV takes the lead, simply because its technology was built for scale from day one. And that brings us to our final thought, a question to leave you with. As this technology grows up, what's going to be the true yardstick for success? Will it be the price of a coin, driven by hype and speculation? Or will it be the sheer volume of global economic data it can handle, driven by real-world utility? That right there is the core question at the heart of Bitcoin's economic endgame.